And welcome to our next show of Lumina Non-Consensus Investing. I'm really pleased and thrilled to be joined by my friend Austin Campbell. Austin is a Renaissance man. He's a professor at Columbia, but you're also an entrepreneur. You were at JP Morgan, and you were there at very seminal moments of financial markets history. You testified in front of Congress around stablecoin. And I know you're doing the work you can behind the scenes to help educate policymakers on what matters. You also see the promise and potential around digital assets. So we're going to cover a lot of ground in the next hour or so. We'll talk about stable coins, what that might mean for the FX markets and the treasury markets. We'll talk about digital assets and also China and China detente. So without further ado, we'll get started. And by the way, keep the questions coming as we chat. We'll do our best to address them. Good to see you, Austin.
Good to see you. I only have one complaint with your intro, which is I have technically defected from Columbia back to my alma mater, so I teach at NYU Stern now.
Oh, that's right.
Recent development.
We won't hold that against you. You're still in New York then.
I still am in New York, and technically I think you called me old by saying Renaissance man, so I'll let that slide.
Right. It's a term of endearment. So let's get started with the stable coin market, right? There's a stable coin bill that, I'm sure you can give us an update on where we are with that. Very disappointing to see that it wasn't passed. And more broadly, we'd love to understand what impact might this have for American financial markets, and should someone like Secretary Bessent be excited about the opportunity?
Yeah, so let's start with stablecoins as they're defined in the Genius Act, which is the one that's in the Senate, and the Stable Act, which is the one that's in the House, because these are relatively similar from a financial construction standpoint. So the theory behind stablecoins there, because if you look at the crypto market, they've called all kinds of things stablecoins. All of them have been coins, but on the stable part, varying degrees of success. So this act attempts to codify a framework, and what it says is after 2008, there were a bunch of things that we called cash that blew up and went completely nuclear in the crisis. That's things like asset-backed commercial paper, prime money market funds, a lot of kinds of bank deposits. And I would summarize the thinking of the Genius Act as stop it, right? That they've looked at post-2008 financial markets reform and said the thing we've canonized as being like a non-fractional reserved, safe form of holding money is the government money market fund. There's like 6 trillion-ish of them currently in financial markets. They've posed no stability risks. And all they do is basically hold T-bills or do a thing called repurchase agreements. So it's called repo in financial markets, which in really simple terms is I lend you cash, I take securities as collateral. And in a government money market fund, those securities are, unsurprisingly, treasuries. Okay, this is super simple. It's super boring. They say if you want to do a stable coin, congratulations, you are doing that. And importantly, you are doing that in a way where the reserve is for the benefit of the token holders. It's bankruptcy remote. It lives in a box. So also no taking all that money, rehypothecating it, doing like fractional reserve lending, et cetera, et cetera. So I would tell you, when you look under the hood, despite all of the rhetoric around the Genius Act, it's essentially codifying the most boring financial instruments humanly possible, which from a consumer protection and stability standpoint, probably a good thing. So I was going to say, I think that's an explanation. Do you want me to go into where I think we currently are on the legislation?
Yeah, look, like kind of a brief update there, and then let's dig into the promise and the opportunity of stablecoins and what that means for the markets.
Yeah, so on the legislation, there's been, what's the best way to say this? A pretty confused debate that's emerged about stablecoins and what they can do and what they are. So a lot of people on the Democratic side of things have gotten themselves tied up in thinking that stablecoins are somehow inherently risky and pointing at things like UST without having done the work to understand that, yes, that is specifically the point of this bill, is acknowledging that those things are risky and telling people to stop doing that. Because the contra is in a traditionally Democratic stronghold, which is New York State. They've been regulating stablecoins since 2018. zero NYDFS stablecoins have ever had any peg stability problems. And the Genius Act basically steals the NYDFS's homework and just makes it federal.
Mhm.
So I think a lot of the opposition is confused. There's been a big education effort after the failed vote to close debate last time. It sounds like late this week or early next week, there will probably be another vote to move forward, and it seems more likely to pass after a lot of discussion.
Hmm.
Now, the impact on financial markets, if that happens, is going to be significant and dramatic. I always caution people that financial markets transformation takes longer than people think, but also the impact is bigger than people think.
Mhm.
And stable coins would mean for the first time really in, you know, basically the post electronic money / internet era, people have the opportunity to transact with and leave their money in a cash like instrument without taking counterparty credit risk to a bank and yet still get all the functionality of the modern financial system. Because right now, today, like I'm a regular two-legged human being. I live in Brooklyn. If I go and try to pay for all kinds of things in cash, I'm going to have varying and not particularly great degrees of success, like buying online, paying my Verizon bill, like paying my mortgage. Like these are not things I can do in cash. You must have access to electronic payments, which for now mostly means you're dealing with banks unless you've done something very clever. And so banks have this payments monopoly that is kind of, in many ways accidental, if we're being honest. Nobody writing this stuff in the 1970s was like, aha, everybody will be using Zelle in the future. They didn't even know it would exist.
Mhm.
And so we've sort of handed banks an electronic payments monopoly. And this bill is really a big step in starting to unwind that accident.
So that enables non-banks to get into the business of payments. Now, non-banks already are and have been active in payments. Stripe is one of the leading payments processors. There are PayFacs, such as PayPal. Um, so the banks do advantages, though, because they can access Fed master accounts. And this has been one of the issues that Caitlin Long from Custodia has been seeking to access. Could you help us just distinguish the advantages or the moat that a bank has versus, say, a non-bank entity, and how stablecoins might change this setup?
Yeah, and I'll point out a lot of the alternative payments providers in the United States themselves actually still rest on top of banks, right? So if you look at like where Cash App is holding your balances, well, good news, guys, it's a bank under there. And so what I would say is the advantages that banks have are they have Fed master accounts, they have access to the Fed wire system, they have access to ACH, they have access to Zelle, and they have, I'm going to call it a privileged regulatory position in the sense of having FDIC insurance on their balances, right? So if I were to start independently a trust company where I wasn't going to do fractional reserve banking and say I wanted to do all these services, I can't get FDIC insurance and I can't get access to a lot of those systems. Again, that is a regulatory decision that we made in the United States. There's nothing, call it natural economic or market forces around that. That is purely the product of the government passing laws. And so stablecoins, by providing native cash balances that don't need to be insured because they're backed by T-bills. We don't have FDIC insurance on government money market funds, and that's fine. Can now exist on native like payments rails and be transferred peer to peer between people without needing a bank as an intermediary and sort of creating a parallel open access system that starts to erode that monopoly. In
Mhm.
the same vein, certain banks now are likely to start stable coins that comport with this act. So now you have access to all of that stuff and a form of deposit at the bank that's not commingled with all the
So,
fractional reserving.
so who are the winners and losers? Like in terms of the ecosystem, you've got the legacy money center banks such as a JP Morgan, the Citibanks, and the Bank of America of the world, who have really low cost funding and distribution. That's kind of one bucket. Then you've got leaders in the stablecoin market. There's US, that would be Circle, non-US, that would be Tether. Then you've got these kind of non-banks providing payment services, which we talked about, the PayPals of the world. There's the Adyens of the world, global payments. Who stands to gain? Who stands to lose?
All right, so let's start with the losers because I think these are in some ways easier to identify when you're disrupting a system. So I'm going to put them in the United States locally into two big categories. Category one, if you run a small to regional bank and your entire net interest margin comes from paying your depositors zero and then making loans where you don't have a significant edge, you are screwed. Right. And the reason for that is the activity that you're undertaking essentially relies entirely on giving borrowers a significant invisible subsidy by ripping off your depositors. And now the depositors are going to have better access to other products with a better value prop and less risk, and you have a problem. I'm going to transparently say, as a market structure guy, I don't think that's a bad thing. Like, these people are, quite frankly, probably negative net return for the economy. So washing them out is a good thing.
Are there
The
many
other,
regional banks actually doing that? I know the money center banks do that all day long. They offer very little interest, but the regional banks do offer a higher rate of interest. I don't know if there are any banks out there doing close to zero.
there are a surprising number doing close to zero. Like, just walk around in New York and go, like, through my neighborhood in Brooklyn, there's like 12 banks, and I've poked in at every single one and been like, what do I get on a checking account? What do I get on a savings account? It's surprisingly low. Now, there are some outliers. Like, I could say positive things, for instance, about like the SoFis or the Discovers or Capital One, right? Like, so not everybody.
Right.
But I'm saying, especially before we get to the money center banks, if you're like, I'm going to pick a random bank here. If you're like, Ridgewood Savings Bank in New York, I know them because I walk by them to get coffee, and you're going to continue paying zero, you're done. Like, there's no value prop to be there.
Their
You're
net
just
interest
done.
margin will have to go down if they want to stay competitive, because consumers will have more choices. And their net interest margins are already challenged in a higher rate environment, especially the smaller
Correct.
banks. For them to
Correct.
attract
So
deposits, they need to have a higher rate of interest. They don't have the services that a large bank can offer, or a deep branch network.
And so, one, that, and two, they're not specialists in some form. Because if you look at some of the smaller banks, there are some that have specialized that are very, very, very good, right? Like, you could have people like the coastal community banks of the world that are facilitating for all sorts of interesting fintech activity. You could have the people running 24/7 fast payments networks, right? Or with aspirations to do so, like the DARTs, like the Western Alliances of the world. You could also have people who, quite frankly, do have an edge in local lending markets. And even if they move to more of a distributor model, by being very good at underwriting, will continue to succeed. What I'm saying is, the banks who have kind of gotten by being extremely mid without scale are going to be one of the big losers here. The other set of big losers, I actually think, are the people running the current payments cartel in a lot of ways. So, like, looking at you, Visa and MasterCard, where if you have a large payments network that exists to facilitate net settlement and sending things end to end and are charging 4% interchange on this, your days are numbered.
So
I
you
just
say
don't,
that as Visa hits approaching all-time high today as we
I
speak,
do,
with the
I
trailing
do.
$660
And
billion in market cap on the table, and profit pools at risk.
correct. And I would remind people that up until people truly realized what was happening, Borders looked pretty good too when Amazon had showed up. And then, when things change, they change all at once.
Barnes and
So
Noble. Let me challenge you on this point, though. So
yes,
the Visa team is very deliberate, very conscious about digital assets and crypto. They've
I
got
agree.
capable leadership there too. Guy Sheffield and others, they talk about crypto in their earnings transcripts. So like you, I had that same hypothesis. But Visa's answer to this would be, hey, you still need an authorization layer at both endpoints. And you also need merchants that comply with various laws, and Visa can enforce standards and controls set by the US government to ensure that actors comply with law. So Visa is saying, hey, actually, it's not about the network. It's about the access points, the authorization layer, and the compliance layer. Is that a valid counter argument or no? Maybe Visa can look at this as cost optimization. I mean, Visa, they have settled transactions on the Ethereum blockchain for at least one credit card, for example. More proof of concept, but yeah.
So one, I actually do think pretty highly of the Visa crypto team. I think the problem they're going to face is they're moving from a closed access system where to be part of it, you have to be a bank, to an open access system where to have to be part of it, you need a wallet. That naturally tears down walled gardens and brings down margins. So I'm not saying Visa will cease to exist, but I am saying their margins will collapse. Now, back to the Barnes and Noble example, will there be individual players within that space that probably do well? Actually, yeah, but will they do well by murdering the majority of their opposition so that they consolidate within a shrinking space? Also, yes. So like, could Visa specifically do okay by killing all of like MasterCard, American Express, Discover, et cetera? Probably. Could the entire market structure remain in place with the same margins? Zero chance.
Got it. And when you say wallets, that's a very good distinction. So in the current world, if you want to access the Visa network, you've got to be an issuing bank or a merchant acquiring bank. The merchant acquiring bank, they go sign up the merchants, they deploy the terminals that people swipe, they take a fee for that. And the issuing banks, they give their credit cards and debit cards to the end consumer via the bank. In both cases, the banks are the source of distribution. Now, when you say a wallet, now by that you mean like a decentralized non-custodial wallet?
Or maybe even a centralized custodial wallet, but issued by a non-bank, right? Which again, this is where the wall does not have to come down from like where it currently is straight to zero, but even having the height dramatically changes the game.
Got it. Right, I see. Right, because the U.S. government, just how all the anti-money laundering laws work, they're subject to, OFAC, Bank Secrecy Act, KYC. You know all the acronyms. I see you nodding
Yes,
your
I do,
head
unfortunately.
there. Right? Probably too many acronyms. But they're going to want a throat to choke, meaning a point of accountability in case there is a compliance violation. So, but your point is, hey, the non-banks can step into the game and compete with the banks and drive a wedge into the value prop of Visa, MasterCard, and American Expresses, and that'll create competition and that'll bring margins down.
Correct. And also, interestingly, you've stepped into one of my other big categories of losers here, which is, I think, legacy financial compliance firms and people, right? Because one of the counterintuitive aspects of moving to stablecoins is if you think about anti-financial crime in the current system, it's nearly impossible to actually catch the majority of the crime, right? There's estimates of like 200 billion to trillions of dollars of money laundering out there. And the reason the estimate boundaries are so wide is that nobody has visibility into the system. So your error bars are like gigantic.
Right. How do you
And
know
that's
right.
Exactly. You don't know what you don't know. And that's because in the current system, data is on an account basis within one institution. So like I'm going to take a chain of things that I've actually seen. Like this is a real set of transactions. I won't name the players, but like this happened. So you have an American who banks in the United States who sends a wire to a relative in another country. That relative goes and spends the money using a card at a business. That business pays money to an owner, and the owner sends that money through the Hawala network to Hamas. Right? That is a thing that actually happened. That is a real set of transactions.
Right.
And in that current structure of our financial market, there is no way for the bank that sent the original wire or the bank that was essentially doing the card transaction to know that that last step was happening. So what happens is wherever the weakest boundary is, wherever you can compromise one employee, wherever you have a local regime that doesn't fully comply with laws, all of the money flows there. You can think of like criminal enterprise.
Panama.
What's that? Yeah.
Cyprus and Panama.
Yeah, I could name many more. Let's not start naming 2/3 of the countries in the world. But the point is, and by the way, even in the United States, the point is the people who want this money are like a gravitational pull, and they'll suck it in through wherever they can get it. Right? Is that traditional rails? Is that cash transfers? Is that like the Hawala network? Is that PayPal? Is that crypto? The answer is yes, wherever we can get this. How do you stop them? The more you know about the system and their activities, the easier it becomes to interdict. And this should seem obvious once you think about it this way, but like, do I know more if I'm a merchant who's done 2 or 3 transactions with a customer? Or do I know more if I'm Facebook and can see all of that customer's activity online? Right? Like it's pretty transparently Facebook. That's why, everybody, the US government, the EU, et cetera, is so mad with the big tech companies. Well, using blockchain rails starts moving financial activity writ large, even if we can do a good job of, call it, pseudonymous account protection, towards the Facebook model. We're going to be able to see the entire system. If I'm a stablecoin issuer and I have a stablecoin where I did mint burn for, like, you, Rom, right? Like, you're in the United States, you run a legitimate financial business. I have no concerns. Okay,
Right.
we onboard you, you mint my stablecoin. You send it to your relative. Also cool. That relative spends money in a business that looks legitimate. Also cool.
Right.
Then that business pays a dividend to the owner, who then sends this to a wallet controlled by Hamas. Aha.
Right.
I can see that now. And also, as the issuer of the stablecoin, I have freeze and seize capability. So I can take that money right back from Hamas at that point of transit.
Two
Well,
questions.
suddenly,
Sorry,
yes.
real quick. Who's the we that can see it? Is it just anyone that's inspecting the blockchain like etherscan.io? Is it the public? Or
So,
is it a government authority? And then second, what the mechanism for seizure? How would that work in a permissionless chain, or are you contemplating a permissioned chain?
so I will point out, I think applying the permissions at the chain level is a false dichotomy. So let's come back to that part of the question. But first, who can see it? The answer is that depends on the construction of your blockchain. The answer is always, in many ways, whomever is running the blockchain. So for Etherscan, it's a public decentralized like network. Everybody is the answer. But
Right.
even if it's not public and decentralized, if it's like, say, an Avalanche subnet, right? Or if it's like some sort of privacy preserving protocol where the validators can see it all, but nobody else, it could still be issuers, certain regulatory agencies, et cetera. The distinction of, like, we only have JP Morgan's Onyx where only JP Morgan knows, and Bitcoin, and there's no intermediation between those 2 points, is wrong, right? The technology is still evolving. And I would, in fact, writ large, encourage anybody in crypto or banking who's thinking of moving financial services on chain. You need to start looking at things like Stellar's validator model of doxed public validators, or like Avalanche subnets, or what like people like Alio are doing, or like the folks at Miston Labs. Like, there are many intermediary steps here that are not just it's Bitcoin or it's like Fed CBDC.
Right.
Okay. Number 2, stablecoins that operate either via smart contracts or have like asset controls at the base layer of the chain, like say Stellar does, have freeze and seize capability that don't require you to know the public key of, or excuse me, the private key of the wallet that you're interacting with. So like, I can have a wallet that I knew nothing about as the issuer other than that it exists. Watch my tokens move into that wallet with any of the major stablecoins. Like, we could do this and did do it at Paxos, and reach into that wallet and either freeze the coins so they can't be transferred, or even seize them back and burn them. Right? Like, we could really reach out and touch somebody in a way that is not possible in the traditional financial system. And I don't need to know your private keys to do that.
Mm-hmm.
I can control that via the smart contract that controls the asset.
Got it. Interesting. So let's go through a couple of names here. You let me know real quick, winners and losers.
Yes.
Western Union.
Probably. Okay. So if they do nothing, a loser, right? All of the like remittance companies in the long run, as you get merchants acceptance of stablecoins, people can receive a stablecoin natively, go spend it natively. It starts to feel, for lack of a better term, like money. I know there are economists who will get angry with me for describing that as money, but like, at the point at which this starts happening, you've become money from a practical perspective. People don't need to transfer out. Why do they need Western Union anymore?
They're a loser, right? Because it's digital, phone to phone, and you won't need to walk into a local Western Union branch. How about Stripe?
Stripe probably has the opportunity to be a winner if they make the right moves, because exactly as you said with Visa, think of Stripe as wanting to be in that same business of being the authorization layer, but now being able to eat into more of that as the wall comes down. So I would say competitors probably have an advantage in that one. I think Stripe is likely to be a winner if they play their cards right.
Right, because they have the merchant network that they built out with all these developers. So they
Yes.
wouldn't necessarily need Visa, although Visa and MasterCard are these massive contracts. So when you sign them, it's difficult to compete with them. And those contracts are anti-competitive in nature. So there might be a legal constraint, but they'll have to sort that one out.
Well,
What about
the stablecoin bill and like some of the anti-competitive provisions that may be contained therein could start eroding that as well.
really? That's good.
Yeah.
What about PayPal Adyen?
So PayPal launched a stablecoin for a reason. I think they've both seen the existential threat and the opportunity. And if you talk to the team over there, so like Dan Schulman, before he left, was a large crypto proponent. Jose, Paul, Larry, like those guys, just like the Visa team, really know their stuff, are thinking
I agree.
deeply.
Yeah.
It's a trusted brand, large network. I think they're likely to be a winner because they're among the first movers.
Yep. Adyen, another one.
More questions. If you haven't already made moves and you're in payments and those moves are significant, you're
Yeah.
actually further behind the curve than you think.
Right. It's going to happen quick.
Yes.
What about the big tech companies? And the obvious one that comes to mind you referenced earlier is Meta. Meta, of course, had the ill-fated Libra. Thought it was a brilliant idea, actually. Zuck is clearly a crypto fan when you think about these things and these concepts and where they come from. He had Libra, and Libra, if I recall, was going to be backed by a basket of global currencies. That didn't go anywhere. They didn't go anywhere partially because they had these unhosted wallets and it didn't comply with bank regulation. But then they rebooted that with David Marcus as DM. DM complied with everything under the sun. Then, as reported by the Financial Times, Janet Yellen met with Jerome Powell, and Jerome Powell said, "Yeah, look, I think this makes sense. Let's go do it. They comply. Why not?" The presumption in a free market economy with private enterprise that business can go do things that comply with law. And then Janet Yellen said no. And so DM died. But presumably DM or presumably Meta and Google would be potential winners here. And also maybe Amazon, given the
So
third party.
I'm gonna say no.
No.
I think all of them are actually going to be. They could potentially be winners, but not for the argument you just made.
Okay.
I think the bigger problem that all of these people have is not like what you just said about compliance, BSA, AML. I think it is the fact that the Department of Justice exists and the Bank Holding Company Act exists. There is a very strong argument that if Meta launched the token and it scales, congratulations, you are now a bank holding company, which would require you to divest, oh, I don't know, Facebook, right? Like the business. You can't do that as a bank holding company. There are a list of financial activities that are permitted. I will tell you, I suspect in whatever stablecoin draft emerges from Congress's law, there will be a statement that essentially the Bank Holding Company Act provisions apply to stablecoin issuers and their corporate family.
Oh, I see.
So,
If you're a
yes,
stablecoin issuer, you will be subject to the Bank Holding Company Act?
correct. Because let me put it this way. If you want to tell me that Meta can launch a stablecoin, why can't JP Morgan launch a search engine?
Well, but that's because of the separation of banking and commerce, which is a very ancient, relevant.
Which is, but as we move stablecoins into like the mainstream of banking and y'all want Fed master accounts and like access to all that, congratulations, you are a bank.
I would say let JP Morgan, if they want to get into social media, JP Morgan, as you know, started as a water company, as a waterworks.
Yes.
And nothing wrong with it.
I'm aware.
Yeah, in other countries, you can provide banking services even if you're commerce. In fact, Amazon can underwrite most merchants better than banks. They have all the data. They know the inventory turnover. They know the customer reviews. They know the credit quality. They know the ability to execute.
I'm not disagreeing with that point, but I am saying we have a logical consistency problem that will come out in the United States of either the stablecoin issuers should have to comply with the Bank Holding Company Act, or you probably should get rid of the Bank Holding Company Act.
So,
right.
So if stablecoin issuers have to comply with the Bank Holding Company Act, then that would limit the ability of non-banks to compete then. So how does it really lower the law?
It limits the ability of non-banks who have large unrelated businesses. It certainly would not stop like PayPal, Cash App, like Visa, MasterCard. They are financial services businesses. And certainly in any draft I've seen in the way it's been written, they'd be able to launch it. I think what it does is stops like Meta.
I see. Right. They'd obviously be subject to Federal Reserve regulation and they'd have to have a significant board and all sorts of compliance. It would change the culture. It would shift the culture to even more compliance. They're already living and breathing that now because they deal with payments.
But you'd also be prohibited from operating the whole tech business. Like the whole point of the Bank Holding Company Act is they didn't want, like within JP Morgan's corporate family, them to have like General Motors, and General Motors fails and then endangers the bank.
Right, right. That makes sense. Now, you mentioned earlier that these stable coins,
Well, I want to hold on. I want to pause you because there's one other set of winners we haven't talked about at all here that I think is very important, which is
good.
One, consumers. We'll get to them. The large banks, right? I actually think JP Morgan, Bank of America, Citi, people at the Standard Chartered, people at that scale are likely to be net winners because the value proposition of those guys is scale in the physical world, funding, and trading. Right? They're not there to take deposits and merely make loans to consumers. Like they are facilitating massive amounts of global international volumes in securities, interest rate derivatives, like FX. They will adapt the technology in. It will probably make their operations more efficient, but like nothing changes that edge for them. In many ways, used properly, stablecoins might reinforce that edge for some of them. So I actually think they're going to be winners.
Yeah, that's a great point. And that would advantage like Citibank, who's got an incredible international payments network, probably especially more so than other banks. JP Morgan would be right kind of behind them on international payments. Bank of America, who knows? They're not as strong there. What about rehypothecation now, right? So you mentioned that these stablecoin issuers, they would fully collateralize the liability. You know, when you issue a stablecoin, it's backed by, in this case, a treasury bill. That would limit the velocity of money. That would limit loan creation, right? Because just kind of the 101 stuff in fractional reserve banking. If I make a deposit in Bank of Austin for $100,000, you can turn around and then lend those dollars to other parties subject to different rules and ratios and all the rest. When I visit my ATM or my online account, you say, Ram, you have $100,000 on deposit here, even though you've gone out and lent that to others. That creates the so-called multiplier effect, and that drives money velocity. So, you know, is this approach to stablecoins, if it becomes a greater share of payments, does that become contractionary to money velocity and credit growth and lending?
So my answer to that is it's way more complicated than people think at a first like blush. And the reason for that is twofold. One, if you're taking deposits out of the system, putting them into stable coins, but the stable coins themselves can do reverse repurchase agreements, banks can pledge them treasuries as collateral, borrow the cash, and go lend it. Right. So like in many ways, it's just moving banks from deposit funding to repo funding. Right. So like rebalancing that post the crisis, which, you know, honestly, one, probably a net positive. But again, two, this is why I think big banks are winners, because who can borrow at scale in repo markets? JP Morgan, Bank of America, Citibank, right? Like not the tiny local guys. Two, have you ever heard of stable value funds?
This is like the money markets that don't break the buck kind of thing, like the reserve fund, or what's that?
No, so stable value funds exist in 401k, 403b world. They're a instrument that exists as your cash preservation option in retirement funds. And the reason they exist is if I put a government money market fund in a 401k, I'm killing an ant with a bazooka. I do not need 100% daily liquidity in a vehicle that is like trapped and locked and money is in there and it can't like functionally leave at scale.
Right.
So what you do in stable value, and by the way, there's about 1 trillion of this in the world. I used to run this desk at JP Morgan, is you take something that looks like a very diversified, very vanilla bond fund of about 2 to 4 year duration. So like something you would expect from Vanguard. Let's put it that way. And then you sell a guarantee on top of it that says, hey, if everybody withdraws their money and you liquidate all of the securities and there's not enough money to pay the remaining people, I'll step in and kick in the rest. So they're going to get their $1 back. right?
Mhm.
You can think of it as a privatized form of FDIC insurance for 401ks. And it's
Got
worked extremely well. It
it.
sailed
Right.
right through the crisis. And it's because of the hard boundary on that container. Well, if stablecoins scale enough to be a significant portion of deposits in the system, if you follow the arc of financial evolution, I would imagine they start looking like stable value funds, and we have some sort of backstop for them that works that way because definitionally, like people can't take all the money out of the US system at one time. Cause like if you take money out, you go do something with it. Like it's a
Equilibrium.
plus one,
Right.
minus one.
Yeah,
Right.
exactly. Yeah.
And so I think early on when they're still scaling T-bills repo and reverse repo with treasuries only is probably a good idea. But over time, if that market truly becomes gigantic, you would want them to essentially be call it an index fund of like investment grade lending in the United States with some sort of backstop. That's call it a more transparent, less bespoke version of the current banking system, which
So,
is probably a net benefit.
right. So in aggregate, you're not going to see an impact to lending because these dynamics. But would you see a shift in the actors that do lending? For example, the larger banks.
Yes, I think the people that will get hurt the most in this sort of framework are probably people who were used to getting sweetheart deals from local banks, which is largely rich commercial real estate developers. Like they're going to get the short end of the stick here. Some forms of project loans are going to get the short end of the stick here, though a lot of those have moved out of the banking system already post crisis. That's really, but the stuff that remains is going to get the short end of the stick. And I would say a lot of the local merchant business is probably going to move from small banks to non-bank financial companies that then distribute that into capital markets. So the alt lending businesses will grow. The like local bank lending businesses for those franchises will shrink, which by the way, again, probably a net benefit for markets in general.
Well,
Impact on
that's a drag on Main Street, though. What you talked about there, like regional
it.
banks and community banks, they do the lending to Main Street.
Is
JP
it
Morgan.
or is it just a transfer of the lending of Main Street to people like Square and PayPal? Right. That's a transfer function to me,
Yeah,
where I
I think.
think it will.
Yeah, go ahead, go ahead. Well, the Square and PayPal though, their financing comes from capital markets and through the sale
Yes,
of loans, not funded via deposits. So
correct.
that lending framework is cyclical. It's cyclical because capital markets turn on and turn off. And number two, they're dependent on rates because investors have to hit return thresholds above certain rates, as opposed to banks, which can lend despite the volatility in, say, the high yield market, right? So it's a more fragile, less robust lending world. Like the regional banks and community banks play an important role in addressing these very niche markets that are ignored by the big mega banks. The big mega banks, as you know, they're very good at cookie cutter stuff. They're very great at corporate lending. They're very good at handling the needs of the big boys
And
uh,
mortgages.
and mortgages. Correct. But for example, Live Oak Bank, they are the leading U.S.
Yes.
small business lender.
Yeah.
They know how to underwrite a veterinarian graduate from school because they've got the records and the history and the survival curves and the payoff rates, and they have an exceptional experience because their team just knows that market better than anyone else. Like from a policy perspective, isn't it a bad idea if we're moving lending
I
from that to an alternative finance world?
No, I'm not saying Live Oak will go away. I'm saying what will transform is Live Oak's balance sheet, a little bit like what's actually been happening in life insurance world, if you've been paying attention to that, which is that Live Oak will still be the originator. They know all this stuff. They're really good at it. It's
Yeah.
just that will start moving into capital markets portfolios instead of retaining on Live Oak's balance sheet. Like if you look at Prudential, they only retain like 10% of the risk they write. Right. So it's going to become an originator model there.
Got it.
And then what that tells you is in times of crisis, the policy tools that a central bank will use may be slightly different. Because like this is something that like the maiden lane transactions address for the Federal Reserve. Because if they see this stuff collapsing in private markets and go, oh, but like the fundamentals are not nearly as bad and we're the backstop, like they can just buy it all. And by the way, I will remind everybody for all the complaining about those facilities, the Fed made a crap load of money on them. right? Like they won on a lot of those trades.
Yeah,
So
yeah.
it just changes the policy tools that you
I think there's
use,
more
right?
to.
Like,
We can move past the topic. I think it's super
yeah,
interesting. Look, as you know, asset managers aren't subject to public interest objectives like the Community Reinvestment Act, which I think is horrible and should go away, and it's antiquated. We won't get into that now. It had a role in a certain place in time. The role is not necessary now. It's used to
yes.
cajole and abuse banks with non-objective criteria to lend within certain neighborhoods, including loans that don't make any money and lose money. But asset managers, they're profit oriented, right? Banks will lend in a recession. Banks will lend in a recession, and that helps us move the business cycle. They're
But
conscious
you
of that.
can,
We'll go to the regulator and say, "Yeah, we made these loans. We're lending in our market."
I will say this one final point, and then we can move off of this. You can totally get asset managers to lend in a recession too. The question is just how you structure the response from regulators, right? Like, as you said, it all comes back to who is
Totally.
making the money, when, where, how. And
Sure.
by the way, the fact that banks lend in a recession is part of what has raised all kinds of other costs and why depositors are getting paid zero, who then don't have that money to spend. Like, it really is an allocation problem, not an aggregate levels problem.
Right. And like the asset managers will lend in a recession, except at a rate of interest you're not going to pay. So the lending doesn't happen. That's what's going to happen.
But if the Fed is sitting there buying stuff onto the balance sheet at certain rate, like again,
Ah, yeah.
yes,
Oh, wow.
there are
That's
mechanisms.
right. I get it. So that's a whole different rabbit hole. But essentially, you can
Cool.
see a securitization market develop, and then the senior bonds would be considered high quality liquid assets. Then the Fed could purchase those bonds, and that creates a rate that's attractive to lend against. Uh, so
I am literally suggesting other forms of lending markets may start to look more like the mortgage market over time.
got it. Fascinating. So let's talk about Secretary Besson here and how would he react to stablecoins? The U.S. government's got a boatload of treasuries. We've got to refinance them. Uh, Janet Yellen, Secretary Yellen, did not term out the debt when the 10 years at 1.5%. Here we are now. What's the connection between stablecoins and the funding needs of the U.S. government?
Okay, so Secretary, if you're listening to this, you have some really good people internally at Treasury already who have thought deeply about this. So I know you know the punchline that I'm about to say, but the US Treasury should be jumping up and down and throwing a party over dollar stablecoins. And the reason is the dynamic in markets right now is that international governments have been reducing their holdings of like US dollar assets and treasuries for a while, right? We can see China running them down. We can see others doing the same. And at the same time, this magical instrument has come along, allowing anybody anywhere in the world who fulfills two important criteria to themselves buy US government instruments. And those criteria are, do you have the internet? And do you have something of value to trade for it? That's it. That's what you need to get a dollar stablecoin. And so as say China at the government level is reducing holdings of treasuries, the Chinese people, if they're buying dollar stablecoins, are increasing their holdings of US treasuries. It becomes a direct offset. The other thing is, as blockchain rails expand, as they are used more and more for payments, which since 2022, the data has been showing that these are pretty significantly used for things other than just crypto trading. Like Nick Carter actually has some very good data he's gotten on this. And we're also essentially dollarizing a lot of the world in that way, that private transactions between consenting adults are happening in dollars. I can be a merchant in Thailand paying a vendor in Finland on chain using a US dollar stablecoin. And the only people who need to really agree to that are us. That is not a thing that existed before. So what it's going to do is allow people globally, anywhere in the world with the internet, so basically other than North Korea, to opt into the US dollar system and US dollar norms and out of their local system. I will tell you one huge funding advantage for the US Treasury, like huge win. Stablecoins are already like the 11th largest buyer of treasuries internationally now.
What's the sizing of that? The
Over
funding
two, yeah,
contribution?
over 200 billion right now.
200
And
billion.
yes, with a B. And two, the other part of this that's really fascinating is it's probably the single largest possible expansion of human rights without any form of like military force or coercion possible. Because if I'm a two-legged human being and I live in a country like Turkey or Venezuela or Nigeria, to throw some rocks here in this one, and I have a government that in my local currency is causing a crap load of inflation. And by the way, half the time just straight up steals money out of my bank account, either by nationalizing it and taking it or restricting deposits or literally just stealing it. Now I can instead keep my assets in a US dollar stablecoin that's only going to be responsible to like legitimate court processes in the United States. Because if the Venezuelan government gets a judgment and tries to come to a US court and says, haha, look, we should get this guy's money, a US court's going to be like, please leave. And then an issuer based in the United States will just ignore it. And so the part I think is not apparent to people in the United States and why I feel so strongly about this is if you've traveled internationally, if you have a lot of international friends, if you've done a lot of business elsewhere, that sort of transformation of markets is a massive improvement and
Big
change
deal.
in the lives of billions of people.
Yeah, you're exporting rule of law.
Yes. And like whatever critiques I have of the US system, and boy, do I have some critiques of the US system, it's a little bit like Winston Churchill's quote on democracy, which is to say the US dollar is the worst currency except for all the others.
Sure. Yeah, no, I agree. No, it's a big deal, right? Like you have the freedom to contract with a merchant and a consumer in hyperinflation laden Zimbabwe, and you don't have to have a trust requirement on a government that is stealing from its people or engaged in corruption or making crony loans to people connected to government or in denying loans to people that are on the other team. And you can contract with a US dollar stablecoin where the mechanics behind the scene are off-prem. It's other infrastructures, the decentralized internet. That's a big deal. So yeah, no, that's the freedom angle I hadn't fully considered. You have freedom of information on the internet. Now you're gonna have freedom of money and freedom of contracting. That last leg still need to firm up a bit, but you can see how that can follow with smart contracts, for example.
Yeah, and all of this is, of course, iterative and going to happen over time, and it's grains of sands moving, right? Like we're not moving the entire Sahara Desert in one day here, but the force of that is inexorable, right? Like as you give more and more people the option to interact with the system, they will find the ways to do so. And
Yeah,
I really do think it's been underappreciated by most. I do think Treasury gets this, however.
it's a one-way street. That's a one-way street. How do you walk that back? What you'd want to do is if you were the European Union, you'd want your own stablecoin bill. Every leading currency issuer would want to compete on that, but they wouldn't have the big technology firms or the payments companies or the distribution or reach or even the credibility in their currency to compete.
That last one is really the key because fundamentally, step one is keep your own house clean, right? So like when I was at Paxos, one, the only country in the world where I was certain none of the citizens owned BUSD was North Korea because like they literally couldn't get it. They didn't have the internet. I think everywhere else people may have had it in their hands, but that two, you could easily see this sort of like emergent demand for dollars in the minds of many people in foreign jurisdictions. And the few places where there wasn't big demand for those, it was because they ran their own house really well. So we're talking places like Switzerland and Singapore, where they're like, now I'll own the local currency. It's fine. So like it raises the bar for everybody.
Right. Turkey, Argentina, Egypt, Lebanon. I mean, those countries would probably stand to lose here. Now, $200 billion in incremental funding, that's not nothing, but the U.S. Treasury market is something like $30 trillion in size. Is it enough to move the needle for U.S. funding markets, or is it more around the benefits that we described or what it means for emerging markets and the world?
Well, that's $200 billion in an environment where the US government under the Biden administration just spent 4 years doing everything they could to kill this thing and inhibit the technology. And we still have $200 billion of demand. So I might
Mhm.
cautiously tell people that if we look at this 30 years forward, there will be many, many trillions of dollars of US dollar stablecoins. And by the way, half or more of the currencies in the world may have been wiped out by this thing because, again, why would I own the Naira at
Right.
all?
The way you get incremental funding is when it comes to the currency market is zero sum.
Yes.
Currency markets are zero sum. Stocks are not zero sum. Earnings can go up,
Yes.
productivity can go up, everyone can win, rising tide. The currencies are just ratios. Dollar goes up,
Yes.
some other basket went down. So
Correct.
it really is United States dollar versus other currencies. How then does, say, Bitcoin play into this? You know,
Yeah. So one, you are correct. So like President Trump, if you're listening to this one, cut with the tariffs, just push dollar stable coins everywhere. That's the winning move, right? Like that is the zero sum game.
I would agree.
But two, how does Bitcoin play into this? So in my head, Bitcoin is actually pretty terrible for day-to-day transactions in the current structure of like how it's designed and how it's used in the same way as gold, right? Like I don't go to the deli and buy a sandwich
Right.
with
The
gold.
time to
Like,
print the next block, the
yeah,
cost of the transaction. Yeah.
it's awful. But Bitcoin is quite remarkable as a store of value. Like, regardless of anybody's individual opinion, like your opinion kind of doesn't matter here because the market has said that it believes Bitcoin functions, at least to some extent, as a store of value.
Mhm.
So in that sense, what you really think of is dollar stablecoins as the checking account and Bitcoin as the savings account, if you believe that kind of theory, where they become complementary assets. That the
Interesting.
more money moves on blockchains and interacts that way, the more Bitcoin is good as a store of value. By the way, the more tokenized gold is good as a store of value as well. And it becomes sort of a virtuous cycle of adoption. And again, the things that get wiped out are the ones that are just having significant
Wow.
inflation or not being useful for merchant acceptance.
Fascinating. That's really, really interesting way to think about it, especially because if you're in an emerging market, yeah, you'll transact in US dollars, but you can't access US investment markets, but you can access a decentralized currency. And you'd want a currency that doesn't, it's not subject to surveillance. You'd want a currency that has censorship resistance qualities.
And by
So,
the way, you
right.
can't access US securities markets for now. But if you want to get to the heart of why, like Larry Fink wants to tokenize everything, I think it's the words you just said.
Well, Larry Fink wants to tokenize everything for the kind of the frictionless transactions, and why do we need settlement in a day? Why do we need the Deposit Trust Clearing Corp? Uh, but I think what the concept you're introducing here is a bigger deal because Larry, he's not opening up American securities markets to the world. U.S. security laws still apply. Anyone opening up a brokerage account has to have KYC. It has to be known. I think there was a point in time, maybe they have it now, where you could actually buy Tesla on chain. There's always like a securities on chain project somewhere. You
I
know,
think, but I think the folks at BlackRock may be playing the long game on realizing, like, as we do all that, eventually people are going to realize, wait a minute, now I can let people in Argentina buy US securities, and that's great for our markets. Again, back to like, if you're really Donald Trump and you want more domestic investment, you want a greater
yeah,
edge for US companies, you should push that as far as possible.
yeah. Larry Fink has made the point that U.S. capital markets are undergoing much more competition than they ever have before.
Yes.
From Singapore, from London, uh, Japan. So, and that the U.S. needs to get on board with tokenization quickly to maintain its competitive advantage. And you also have companies staying private longer. That deprives the investing public of different investment opportunities. So the more we can tokenize more quickly, the better. Apollo's been focused on this as well, as Mark Rowan, and Mark, I think, might have the ear of the president. It was rumored that he was going to be a Treasury Secretary nominee. Apollo's looking at how do they tokenize private credit and also create like a yield product off of it. And it starts to resemble what you would get from a savings account, except the loans are issued by Apollo instead of your bank. I'm not sure how they think about liquidity of those loans and how do you manage the liquidity in terms of your deposit and all the rest. But the non-banks overall, just coming back to where we start with winners and losers, just seem like winners here. So overall, you're saying, hey, Besson will be excited. He should be excited by stable coins, and Bitcoin would play a complementary role with stable coins, especially for savers in emerging markets that can't access American or more mature investing markets.
Correct. Yeah. And that leads me to the final like big loser of US dollar stablecoins, which is China. Right. If China's been running around the world trying to do the Belt and Road to have greater adoption of their currency for international trade, to settle things on like non-US dollar rails, and at the same time, this sort of unexpected, like disruptive free market torpedo of US dollar stablecoins ends up in the water, that's a real problem for their efforts. Because
Huge.
it's easy for China to do
Yeah.
this at like the nation state level, like the Chinese government will trade with the Saudi government using it, but it's much harder to force like individual two-legged humans to do it when they have this other option. And so this is from a national security and like economic policy perspective, hugely disruptive for like China's plans to move away from the dollar.
Well, can China control and limit the adoption? I mean, they don't allow U.S. technology companies in the market. They have an export control. They have a cap on the amount of dollars you can take out of the country. I think it's like $60,000 plus or minus, somewhere around there. So, can China just say, no, we're not on board with this and deny their public access to this? That would just be their default position. So does it matter?
So blanket denial of the public requires you doing what North Korea did, which is you would have to take the internet away from your populace, which I would suggest may have other mildly negative effects for the Chinese economy if they do that. If you don't do that, can you like slow it down? Oh yeah, 100%. But can you stop it? Probably not. Because again, what do I need to get my hands on a dollar stablecoin? The internet and something of value to trade for it. So if I'm somebody in China and I've got anything I can sell and somebody will send me a Bitcoin or US dollar stablecoin, like done.
So
Right?
let's play it out. So operationally, let's say I'm a depositor in China. My funds are at
Yes,
a Chinese depository institution.
correct.
Now, China can say, hey, you're not permitted to transact with an exchange that will convert to foreign currency or
Yes.
other stable coin, right? So would that be a choke point, or you would need them to somehow buy a gold bar and then deliver the gold bar to someone, and then the person receiving it says, "Okay,
Which is totally doable because
that
China
works."
is an export based economy, right?
Right?
Like, so like, here's the ARB, right?
Yeah,
If we want to be explicit about it.
sure.
I'm a Chinese company. I have products that I want to sell to a US company. And normally I'd quote them like in renminbi, let's say $50,000 equivalent. Well, now I'm going to quote them $25,000 equivalent, and the Chinese government doesn't need to know they sent me the other 25K in crypto. Because how are you going to police that? Right. And so the answer is as soon as you're doing external trade, or even in some ways internal trade, but mostly external trade, this becomes an unsolvable problem. You have to stop letting people use the internet and transacting with the rest of the world, which is why, again, only the North Koreans really effectively interdicted this.
So the fact that China has a big export economy actually creates their own vulnerability. They just
Correct.
accept payment in U.S. stablecoin, and that's it. That's it. What
Right.
are you going to do? You're
And
North
this is
Korea.
why
Yeah.
this is why I said it's a really underappreciated tool of economic warfare for the United States because it is explicitly a way to break China's currency controls.
That's
This will be
massive.
way more effective than tariffs.
Wow. Wow. No, extraordinary. It's extraordinary. Um, how do you see other countries responding, especially as it relates to Bitcoin? You and I spoke a bit before the show started around how Larry Fink and others see Bitcoin as like an international reserve currency. But if most of Bitcoin mining is moving to the United States, wouldn't there be less interest for other countries to adopt Bitcoin? Because they would see the United States as having the ability potentially to regulate or censor transactions due to having significant amount of the hash rate production in the United States.
So, one, I think there are people in the United States who have that goal, but you actually have to achieve it, which is going to prove harder than people think without much
Yes.
more coercive methods than people would expect. But two, I actually do agree with your argument. And I've said this around like one of the reasons why I'm actually an opponent of the Bitcoin strategic reserve at the national level, which is if a nation state can control Bitcoin, you will destroy the value proposition of Bitcoin. The whole point is that a nation state can't control it. So if you, and by
Yeah.
the way, advocates of the strategic reserve, be very careful what you wish for, because if you go tell the Department of Defense, this is a strategic asset, I want you to go look at the history of the things we've done in the Middle East because of oil, which we told them was a strategic asset, and start imagining in your mind things like drone strikes on foreign mining companies so that we can control hash rate. Like this is not a world you want to live in if you're a Bitcoin advocate or believe in the value. So yeah, I would say you need to be very cautious. Also, that will be harder to achieve than people think. But like, look, if the US really puts its mind to it, yeah, we probably could achieve it.
Right. Fascinating. Well, on the topic of China, any other thoughts, observations on where we are? There's been obviously this global trade war. It looks like both Trump and Xi Jinping are looking for a mutually face-saving way to de-escalate, to get some trade done. Uh, Trump doesn't want to have a dependency on China, wants to put domestic manufacturing back on shore, but can't happen too quickly. And you got a lot of small businesses and you can't that rely on China. And if you're going to stock the shelves for Christmas, you got to get those orders in now. Uh, how do you think about any just sort of thoughts on kind of China-US relationships and, relatedly, do you see China as a true peer competitor to the United States, or are those risks overplayed, overhyped?
So one thing I think has happened with the trade war is that it has revealed that globalization is much more complex and irreversible than people might expect, right? Which is to say, once we have globally diversified supply chains in a multilateral way, moves to remove people completely from the supply chain or talk about interdependency quickly turn into like what we thought was a simple arrow going one direction is actually 80 arrows. And it looks like one of those conspiracy theory diagrams where like, oh my God, what happens? And China and the United States having a trade war is mutually assured destruction for both China and the United States. There will be inflation or deflation on both sides that is very disruptive. You will have collapse of like economic regimes and governments that leads to all sorts of conflict. And the great irony is that the Chinese people and the US people probably have significantly more in common than the Chinese government and the US government have with each other in terms of economic interests. So both sides, because of globalization, serve as a counterweight against large scale warfare between two nation states. So, really in many ways, this is a triumph of like Milton Friedman. Two, if you understand
What's
like
the
the
triumph of
process,
Milton Friedman exactly? Sorry, what's the triumph of Milton Friedman exactly?
that like globalization and a shared economic interest is a more powerful force than like the individual interests of governments. It is arguing for like decentralized economics,
Got it.
like dominating everything.
Yeah.
Because like, to raise a guy, although he's been very skeptical on Bitcoin, I forgive him for that because this is not really his area of expertise. If you look at a guy who's thought a lot about global geopolitics, go read like Zahon's The End of the World is Just Beginning and think about what the real implications of that are if that process actually happens. It's essentially like the dark ages, but globally. And so the incentive for not doing that is so intense, it just keeps pulling people back from the brink and being like, actually, no, we need to find a way to fix this. Ironically, I think what this has shown is that the US and China are both completely dependent on each other in a way that is kind of irreversible unless you want to dramatically reduce the global population in the process of decoupling. Or
Yeah.
you're spending 50 years competing fairly economically to reshore things. Because here's the reality. The US manufacturing paradigm of the 50s, 60s, and 70s is not coming back because a precondition to that occurring was blowing up everybody else's factories and killing all their young people. That was what happened in World War II. And so
Mhm.
without a global destabilization where we were the only ones with effective, like essentially productivity, you're not going to return to a world where like US dominance was so great that like working 40 hours in a factory produces an above market standard of living. That's just a statement on everybody else's stuff no longer being blown up. And so instead, we are going to see this rebalancing of trade. And that's not an argument against American prosperity or like building our economy, but it is an argument against like a tariff based mercantilist strategy to recreate the 50s, 60s, and 70s working.
Yeah, no, I agree. I agree with most of what was said there. The mutually assured destruction, I think, is a bit much though. Like China's got a significant dependency in the United States. Of course, there's reports of riots are starting to emerge now, and China stopped publishing government statistics on
Yes.
employment and other data. But the United States can rely more on Mexico. You know, the iPhones are getting manufactured in China now, on Vietnam. I talked to an entrepreneur in China, from China, who provides certain parts for HVAC service providers, and he moved his production to the United States. And the know-how is in him as the individual. He knows the customer list. He knows what they need. He knows how to manufacture it. It's to your point, the distinction between China, the government, China, the people, and the U.S. government, the U.S. people is a crucial one that I think people forget. It's not like the U.S. government's getting ripped off. We're not writing a check to the China government. These are all voluntary, decentralized transactions between American business and other firms in China. But the owners and operators of those firms in China, they can get up and move, and a bunch of them did. They went to Vietnam. That deprives China of certain powers and controls. So I'm not so sure that it's mutually assured destruction. Like it seems like there's been success in moving production outside of China. Why
So
can't that?
I'll unwind that for a little bit though and say, remember that those people were doing something else before they started doing the things that they're now picking up the slack for China for. Like we only have so many humans. And by the way, I think far and away our biggest problem that people don't appreciate is actually we probably don't have enough humans. Right. With global birth rate declines and everything happening on a 20-year lag, like I have said before that like China is already economically devastated and the US is not far behind if we don't make major changes. And that's just headcount, right? And so as we have a declining worker base, if you now want to shut China out of markets, you are going to have a very significant inflationary shock globally because whatever the people in Mexico were doing before they started doing the stuff that showed up from China is now not being done, right? And like that cycles globally, which means to fix that, either we need magical, massive increases in worker productivity in all these other nations, or something is going to break. That's my point on the 80 arrow complexity of global supply chains, right? Like it really is more complicated than people think. And I agree, you can pairwise substitute all over the place, but like you only have so many Lego pieces. And like I can't build it taller by taking the pieces at the bottom that were the foundation and moving them to the top without the thing falling over.
Yeah, no, I'm with you. I think the productivity will be there, but also look, sometimes the things they're doing previously was, you had people in call centers hacking and doing phishing attempts on grandma and grandpa trying to get their Coinbase account or access social security. So maybe it's a
Yep.
better productive alternative use.
I want to be clear. I think mild to moderate volatility in global markets is a net positive over the long run that makes things stronger. And that global regulators, quite frankly, have probably been too scared of volatility and like causing problems by not allowing enough of it. But I am saying a shock of like taking 1 billion people in China and sidelining them would be a net negative.
Yeah. Let's go to Peter Zahan's argument next now. So thoughtful geopolitical strategist. So you mentioned his book, The End of the World is Just Beginning. Obviously a play on words on Fukuyama's The End of History. Talk about like timing the top of the market with the title of a book like that, by the way. I mean, really can't get worse than that. I mean, he must be living that down for, I guess, like 25 years now. So he actually has a contrarian take on China. He says, look, this one child policy has left China with not just an inverted pyramid, but China's now entering its most productive years with this cohort of people that are like 40 to 45 years old. And it's just getting worse from here. They're productive now, but they're going to age out. And that next generation just isn't there to fill those seats, much less go fight a war and send their only son or daughter to to a war. And so, his view is that China is actually on a very shaky foundation, and they're committed to a path of irrelevance. It's just a matter of time. Is it 10 years? Is it 15 years? Is it 20 years? I think
So,
it's a pretty compelling logic. I mean, China's a threat today. They're a productive giant. They're building a large navy. They're leading on drones, and they're leading on nuclear and batteries and EVs, and they can produce solar cheaper than anyone else in the world. But also the rest of the world can choose not to buy from them. So how do you size up China's the menace of Chinese aspirations to be a competitor to the United States and threat to Taiwan?
so demographics is destiny. I agree with Zehan that China has a demographic problem that is essentially unsolvable. We've already seen this play out with Japan. If you look at the experience in Japan in the late 70s, early 80s, when everybody thought Japan was going to take over the world, and then the subsequent economic fallout in Japan because they ran out of humans, you see what's coming for China. And by the way, China's demographic pyramid is more inverted than Japan's was. It is like the inverted ist. And I will remind people, if you had a one-child policy, to reverse that, you essentially need a four-child policy, and they are nowhere close to that. So unless they just start cloning people in size, or they find a way for automation to get orders of magnitude better than it is right now, like not a little bit better, like orders of magnitude better, right?
Right.
They have a problem.
They need boatloads of humanoids. But I don't know if that even solves the problem, though. It
It
solves
could
a problem. It solves a set of problems.
Yes, it could certainly ameliorate some of the concerns where either they need a lot more Chinese people or they need an army of the Elon Musk like ideal Tesla
Right.
robots. And ideally both. Again, the demographics thing is unsolvable. And by the way, we're seeing this everywhere in the world. I want to remind people, everybody's like, oh, but there's really, growing populations and all these other, well, no. Any country that industrializes sees the birth rate go like this. It's happening in Mexico. It's happening in India. Like all of these places have this problem. We have a societal organization problem when we industrialize, that because our prehistoric lizard brains have not evolved for how to pairwise mate and create children in this environment, the wheels are just falling off. It's a bigger problem for everybody than we realize. China is the leading edge, but everybody else is going to be following them, is my point. And when you see that happen, the other thing that you have, Rob, where Japan is kind of the exception that proves the rule, without Japan's level of social cohesion, you don't have a uniform ride down where everybody's together. You have things break apart. So China, as we currently look at it, is unlikely to exist 50 years forward unless they find a way out of this problem.
Yeah, no, I agree. Nodding my head there. No, it's I'm doing my part. I have 3 kids, trying to contribute. I believe Elon's correct. The world needs more people. Now, the thing that might change, though, is I'm sure that bet between Julian Simon and Paul Ehrlich from a couple decades ago. It was the bet called the ultimate resource, right? And Ehrlich made the bet that you live in a world of scarcity and that commodity prices will just keep going higher and higher. It's like the Malthusian argument.
Yes.
And then, of course, Julian Simon said, pick a basket of 7 commodities, 10 years' time, we'll see who's right. And the commodity prices came down because humans get more creative. They invent new types of technology. The oil became a hazard and something that declined your property value to something becoming an asset. You learn how to use new technology to access resources before. So his point was that humans became the ultimate resource. Now with AI, though, I'm not sure that that's still the case. You could AI, computation, energy, semiconductor.
So I'll pause you there and say, as somebody who's thought a lot about AI and uses it a lot in a lot of my workflows, it's a force multiplier, but it's not transformative. You still need the humans one way or another.
Okay.
I also think we're going to quickly, as a person who's got a trading and data science background, I think we're going to rapidly run into some constraint problems with AI, which is if you properly understand AI, it is essentially a bullshit engine. And I don't mean that in a negative way. It's actually very valuable, but it's taking from trading data and recombining these things. You can think of AI as Silicon Valley having taken the infinite monkeys and infinite typewriters to its logical conclusion and actually done the thing. The problem is the monkeys aren't actually typing new stuff. They're just recombining existing stuff. AI is incredibly good at getting to 80% solutions based on current human knowledge. And you kind of need expert knowledge to get the remaining 20% in a lot of domains, in domains where the training data is available. So, like, I'll tell you this. When I ask AI about the nuances of fixed income trading and settlement, it completely melts down and lies to me constantly. And the reason for that is that most of the people who are really good at that don't put their shit online. So there is not a training library of it. It just doesn't know. And so it lies or it assumes it works the way equities does, which is definitely not true. The other thing is AI, unsurprisingly, has hit this constraint of like the amount you need to push even one more, call it unit of productivity out of it is getting exponentially larger because you're hitting the natural boundary on the data set, right? Like so let's ignore the AI hype and just say, I have a data set that contains all of the knowledge that PhDs have ever come up with. What is the logical constraint on how useful that will be? It is the best PhD. Okay, fine. And we're getting there, but what we're not going to get nearly as easily as outside of that into like new knowledge. And you need the humans creating that data set to train it on. Like, I am very skeptical, knowing some people at NYU have been studying this for a long time, like Vasant Dar, of like AI generated training material into AI creating any progress. That'll just create devolution because they
Yeah.
don't have like a central theory of reality. So again, like back to China. Will AI help? Yes. Will automation help? Yes. Will like better technology help? Yes. But all of that is in a race against population decline. And I'm not so convinced technology will win because, as you said, humans are the ultimate resource.
Right. I think the strongest argument made there is that we don't have AI that can be truly creative. They cannot extend beyond the training set yet. Haven't seen that. The
Yeah.
body of training material will naturally expand, right? Incentives will make that happen. People will write blog posts. The AI becomes more valuable the more training knowledge has. But we don't know when or if AI can intuit the laws of physics, for example, by watching the celestial motion in a data set. It can, that you can model the laws of motion of the solar system with the Earth at the center or heliocentric. We had physics actually where the Earth was the center of the universe of the cosmos. So and then suppose AI can do that. Can it deduce Einstein's theory of relativity, which took it a leap of imagination and creativity?
The
Yeah.
scientific process is also iterative testing. Like I will remind people for the AI to figure out which of the Earth versus the sun is correct. It has to like go out in the world and like test stuff.
Right.
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 Again, to me, I'm very optimistic on AI being a productivity enhancer. So please don't take this as me being like super negative AI in general. I think it's great. I'm glad we have it. But I also think a lot of the hype claims about AI are wrong, right? Like as always, the truth is in the middle. What I would be looking for is, can somebody produce an AI model that consistently produces results beyond the scope of human knowledge? If you've done that, something really interesting has happened. But I, as of yet, have seen absolutely no
Yeah.
evidence on this. And if you read like the papers coming out of the OpenAI guys, like it just drives me insane. They're doing the classic thing that like Nassim Taleb criticizes all the time of just like the up and to the right projection with no understanding of process.
Right. Can AIs be truly original and creative and make a novel contribution? No, like I think on the productivity side and the application, the value's there. You're already seeing in medical diagnostics, you're seeing that obviously in the application of driverless technology. You're seeing that in a lot of areas. It's only going to increase. But yeah, novel contribution is the new type of Turing test for AI. I'm not sure. I don't know. I do think there's such thing like human reasoning, human intuition that's different from deduction and pattern matching. Humans have a kind of inspiration that is we haven't seen from machines yet. But then on the other hand, you've got that game like AlphaGo when it made this crazy move on number 16, and everyone looked at this and said, how did it conceive of that move? That starts to resemble like a flash and lightning eureka type, intuition.
Correct. But there has to be, and this is kind of my point on AI, there has to be a core process that leads you there consistently to produce those kinds of results. Like if you're thinking of AI as a probabilistic simulation engine, you would expect it to get lucky sometimes. And if you run enough of, like, again, if I have enough monkeys and enough typewriters, I'm getting Shakespeare. But the problem is the monkey is not aware that it wrote Shakespeare. Right? That is the difference. We need an AI to be aware, like, oh no, yeah, wow, that Romeo and Juliet thing, that's pretty fucking good. Right? Like that'll be the difference.
Well, yeah, I mean, yeah, you need supervised learning. Even AI has to have a taste for other AIs.
Self-supervised learning in the end.
Yeah. Right. Last topic in question here. By the way, if anyone has a question for Austin, feel free to type it in there. You mentioned Ray Dalio. Ray Dalio has this theory based on his study of human civilizations and the rise and the fall of human civilizations that, the U.S. and really issuers of sovereign debt we're past the peak. He's become a doomer lately. Do you think he's right? Do you think he's wrong? You're a guy that spent a lot of time thinking about treasury markets and repo markets and the role of money and stablecoins. You're highly qualified to have a view on this.
I'm probably closer to Ray than I would like to be. Let me put it that way. Like if you look at global debt to GDPs, we're at all-time highs. And I think if you think of this as a math problem, all of that can really be conceived of in a very vague way. Again, this is not perfect. This is a heuristic approximation. So like George Selgin, please don't come murder me for saying this. But like all of that is prepaid inflation in a way, and we would expect that to start happening. What Ray, I think, is a doomer about, or at least what I'm a doomer about, is going to be the value of preserving wealth purely through owning things like long-dated bonds or cash. Short-dated bonds will move much faster because they have to renew with interest rate cycles. And certainly it's kind of a net neutral to positive for like productive assets, right? Because like, again, this is sort of the beauty, but also silliness of money is the quantity of real stuff that we need to like live our lives is unrelated to like the pieces of digital paper. They're not connected at all. Right? Like an apple can be worth $1 trillion or no dollars, or the dollar can not even exist, but the apple is still there. And we have however many of them we have.
Money is symbolic.
Right?
Yeah.
Correct. Yeah. Money in many ways is just a collective hallucination. And so I would tell people you could be a doomer about the value of specific kinds of money, but still be very optimistic about the future pathway of humanity. And those are two different problems. And it really, like ultimately the guy I probably agree with the most in concept here, maybe not always in specifics, is Warren Buffett, which is just go own productive assets and you'll be fine.
Yeah, no, I think that's right too. I mean, Dalio's point that entitlements are continuing to grow, Social Security, Medicare, Medicaid, is accurate. And the demographics in the United States are getting older, and that's creating the debt burden. And no politicians really focus on trying to address this. They're trying to address
other than Paul Ryan, and we voted him out for it. So
right, that's right. So his theory is that this debt super cycle continues, and the U.S. will issue debt that the global markets will not be willing to fund at some point, and then interest rates blow out when that happens. That's essentially, for those that aren't tracking the Ray Dalio argument. Thing is, the United States debt is still like you said around democracy, it's the least dirty shirt in the laundry basket. What are you going to own? Alternative to that, you can own gold. If you're looking for an asset that doesn't have much risk, there's not many alternatives to that.
Gold, Bitcoin, physical assets. But again, I want to slow everybody down and say at the same time we have that going one way, we have the declining population going the other way that'll depress real asset prices. It's a very complicated space.
Well, that's a great point too. I mean, if you're a boomer, and you're retiring, you are funding your lifestyle through the sale of assets. Now, you might harvest dividends, let's say, but you are in asset accumulation mode in aggregate. The boomers were for decades. They were saving and investing and producing. Now they are in harvesting mode. So they're in aggregate, they are sellers of assets. And in equilibrium, that means higher real interest rates, and that means lower asset prices.
Yes.
So, the response here could have modern monetary theory, the U.S. government can buy bonds, et cetera, but then the other consequences, of course, right?
I mean, MMT is like a internally consistent theory so long as you ignore the fact that it will cause inflation, right? Like my whole thing with MMT, if we think about what's going on there, is at local levels, it's definitely true, but at macro levels, the US government is potentially the only buyer of debt. So you're monetizing it all, which causes massive inflation. Like we understand how that works.
Yeah, the MMT theory is just wrong and flawed. I totally agree with you. Just more that it could be a mechanism to address concerns around yields blowing out or the US not being able to fund its debt. In this,
again, it works locally. The MMT theory is a little bit like, Mandelbrot's writing on turbulence, which is like, as long as things are the same as they were, you're fine. But as soon as the state changes, it works totally differently.
Right. Great. We got a question here, and I think we'll call it a wrap after this.
Okay.
Is the natural first home of best fit for stablecoins at major banks in the corporate space? Thinking about cash management needs, FX needs, bond settlement, dividends, and the frictionless of stablecoins. Do you know specific banks working on this? JP Morgan.
Okay. So first, are specific banks working on this? JP Morgan, Citi, Standard Chartered, Boney Mellon, like all of the major banks, maybe barring one or two that I won't slander here, are working on this. Certainly everybody I just said. Capital One, you can throw in there. Where do I think the natural home for stablecoins is? Corporate payments is one. I think another underexplored one that actually I just wrote a paper with V from Anchorage about is settlement, right? Because if you look at the problems that we still have from 2008 in the current financial system, just buying a stock in your brokerage account actually sometimes involves like 9 intermediaries. It's mind-bending and idiotic. And the way we do settlement in these markets is totally broken. And that's just for a stock. If you go to things like interest rate derivatives trading, where really dumb stuff can be happening, like I'm long an exposure at an exchange in Europe and short the exact same thing in Japan because of the timing of when I put swaps on, and I can't net my collateral. So I'm actually posting 2 ways on this just to get flat. Like there are massive improvements in market that could unlock trillions of dollars of collateral while also reducing risk using stable coins to settle on like a 24/7 global omni ledger. So I would tell you, I think securities trading, but maybe in a little bit of a contra opinion, I care less out of the gate about like stock trading. That largely works. I think it's the really weird stuff like repo and derivatives that will benefit the most.
Terrific. Austin, how can people follow you and learn more?
Oh boy. Probably the best way to do that is at Campbell J. Austin on Twitter if you want a really weird mix of like stable coins and monetary policy and me occasionally complaining about regulation.
Perfect. And you can listen to this on Spotify, YouTube, follow Lumina Non-Consensus Investing, or where you consume your podcast. Austin, thank you so much for joining me. We'll have to do it again soon. I've always kind of thought that there's a gap in the market for an all-in pod, like a 4-person group that is focused on macro and markets and policy. You would be on my short list for one of the people on that. We just got to find like 2 more people. And we'll have to do something like that. That'll be a lot of fun.
I have some ideas.
Oh, definitely. We'll have to chat about that then. Thank you so much, Austin. Until next time, be well. Make it a great rest of the day. Thanks everyone for joining. Be well.